Welcome back to Investors Point of View. Hello to all our community members, students, and everyone tuning in. Today, we're going to dive into one of the most important topics for the year ahead, how to invest smartly in 2026. And to do that, we first have to really dissect the tough lessons that 2025 taught us.
So when we look back at 2025, we've got to understand why so many people struggled. It wasn't some massive, historic market collapse. The real reason was actually simpler and, frankly, more dangerous. Investors just weren't emotionally or structurally ready for the swings. The volatility, that's just a normal part of the game.
And that leads us to the big question for today. For right now, are you truly prepared for this year? This whole explainer is designed to give you the tools to confidently say yes. We're going to break down all those crucial lessons from last year, so you're not just hoping for the best, but you're actively prepared for whatever the market throws at you.
This quote just nails it. 2025 was that loud, jarring alarm clock that nobody wanted to hear, telling everyone that the easy money days were on pause. This year, 2026, well, this is the real test. It's going to reward investors who have a solid structure and discipline, not the ones who are just closing their eyes and wishing for a win.
All right, so let's start by looking right at that wake-up call. The volatility we saw, especially during that really sharp sell-off in March and April, it was like a stress test for everyone's portfolio. And honestly, it exposed just how fragile and, frankly, poorly built most investment plans really were. And here's the thing. This gets to the real core of the issue. The losses weren't just about picking one wrong stock. No, it was about mindset. People completely misunderstood what risk actually feels like in the moment. They confused a good story with a solid strategy, and their portfolios were basically built for a world where stocks only go up.
Okay, let's get into the first major blunder, and this one was a big one. Getting completely sucked in by exciting stories. The biggest narrative of 2025, of course, was AI. Now, the tech is amazing, no doubt, but investing in the story of AI instead of the actual business of AI, well, that was a recipe for disaster.
And this is exactly how it played out. People saw AI slapped on a company name and just assumed it was a magic ticket to guaranteed growth. They totally ignored red flags like weak profit margins, and worse, they often bought in after the huge rally, right after they saw it in the headlines, jumping in at the top with absolutely zero margin of safety.
This slide is so important because it just lays bare that dangerous gap between what felt true and what was actually true. The illusion was, hey, this story is so good, it has to work out. But the harsh reality is that growth without actual, real profit is a massive liability. That feeling of, I've got to get in now, almost always leads to buying high and then getting stuck with permanent losses.
All right, let's move on to mistake number 2. Now, this one's a little more subtle, but it's incredibly damaging. It's about confusing the easy wins you get in a bull market with having genuine investing skill.
Think about it. After a really strong 2024, a lot of investors felt like geniuses. And that overconfidence, it led to some really sloppy, dangerous habits. They started taking on way bigger positions than they should have, their discipline went out the window, and they started trading constantly, thinking all that activity meant they were in control. In reality, they were just cranking their risk up to 11.
And here it is, the confidence trap in black and white. The investor is thinking, man, I'm really good at this. The reality? My strategy only worked because everything was going up. They believed that trading more meant making more, when the truth is that professionals win by being incredibly selective, not by being hyperactive.
Now for the third and maybe the most common mistake of them all, relying on hope as if it's a real strategy. It's the ultimate passive approach. You just buy something and hope it goes up, with no real plan for what to do if it doesn't.
You can spot a hope strategy a mile away. The biggest sign is not having an exit plan before you even hit the buy button. You also see people justifying bad decisions by saying, oh, it's okay, I'm a long-term investor. They hold zero cash, so they have no flexibility, and then they get trapped in these losing positions with no money left to actually take advantage of real opportunity.
And let's be crystal clear about this. When the market is dropping and your stocks are deep in the red, hope is the very first thing to disappear. It is not a strategy, it's a liability. A real plan is what actually gets you through the storm.
So let's make this super concrete. What is an exit plan? It's really simple. It's just the set of rules you decide on for yourself before you put a single dollar into an investment. It defines the exact point where you say, okay, my original idea was wrong, and it tells you it's time to sell and protect your money. It's your financial defense system. Okay, so we've torn apart the mistakes of 2025. Now for the good part. Let's pivot to the solutions. This is your playbook for navigating 2026 like a pro, and it's built directly on the lessons we just learned.
The first and most important piece of the playbook is a total mindset shift. The goal for this year isn't about hitting home runs. The number one goal is survival. Stay in the game, protect what you have, and let the returns come as a result of smart defensive moves. Because only the people who survive get a chance to thrive later on.
So how do we actually do it? With these 4 simple but incredibly powerful steps. 1. Vet the business, not the story. Look for real profits and cash flow. 2. Define your risk. Know your exit point before you ever get in. 3. Stay liquid. Cash isn't trash, it's power. It gives you options when everyone else is panicking. And finally, number 4, execute with discipline. Let your rules, not your gut feelings, make the calls.
And these right here, these are the traits that are going to separate the winners from everyone else. They use conservative position sizes, they have crystal clear exit rules, they don't fear volatility, they respect it, and they're emotionally detached from all the hype in the stories. They run their portfolio like a business.
Let's end on this powerful idea. The market is a tough teacher. It doesn't usually punish you for making a mistake once. It punishes you for repeating that same mistake over and over and over again. The key to winning in 2026 is to learn from 2025 and refuse to make those same errors.
So I'll leave you with this question. What is the number one mistake from 2025 that you are absolutely determined to avoid this year? Write your opinions in the comment section below. Thanks for being here. For more financial points of view, you're more than welcome to subscribe to our channel and give it a thumbs up. See you on the next one.